Hi, and welcome back to today's morning report on Tuesday the 28th of July with me, Rich Perry, market analyst at Anzac Markets. Moving on to dollar yen, and I've sort of been playing out this little correction on dollar yen with the assumption or the expectation that it would start to form these next level of support around the 38.2% fib level. And it seems to be possibly happening that way. We've seen this rolling over of this rally, which lost momentum on the upside, RSI failing at 60 again, as it did in late June. MACD lines rolling over, Stochastics also crossing over. The one concern I have, just as an aside quickly, the one concern I have with this as being just a minor correction is the fact that the Stochastics are now on the brink of confirming a near-term sell signal. Back of your minds, but still, I still think that 38.2% fib is a big level, and I'll show you on the intraday level chart that it is a big sort of pivot level on this chart. It has done for several weeks actually, forming the lows throughout mid-June, again catching the lows and the high, reaction high, and again it seems to be sort of forming the base of support. Slight breach yesterday, back to 23 figure, but still I think that is in play. And the fact that I haven't seen this RSI going sort of sharply into the below 30 level would suggest to me it's more of a sort of an unwinding play that's going to get sort of bought into. If you just take the chart in a bit, you've seen this recovery. Now we're up to a key level, because I think this key sort of resistance band around the sort of 2350 up towards 2380. If I get the crosshair, I can show you that. So 2350, obviously all these lows, and then 2380, these reaction highs that we saw subsequently as well. So I think, and lows. So I think 2350 to 2380 is your initial resistance band. I think how this reacts to that resistance band could well tell whether it's going to be a continued pressure down towards that 2320 to 23 figure level, or whether it's going to start to turn around again. The RSI is interesting in this chart on the hourly, because again out towards 60 on the hourly and just started to roll over. So again, if we see that RSI up into the mid to high 60s, maybe over 70, that would, I think, indicate that the bulls are starting to regain momentum. That would be the sort of position that the RSI was in back towards the sort of middle of July, when it was on that run, and holding up consistently into the mid high 60s, in towards 70 on the hourly RSI. Since then, we've seen more of a corrective outlook, with the RSI rolling over at 60. So if you see it back into the high 60s, 70 again, that would suggest to me you're seeing the momentum turning around again. So this is a key sort of crossroads here for the near-term outlook on dollar yen, up to this resistance and also at 60 on the RSI on the hourly chart. So very interesting time here on dollar yen. We need to just take maybe a quick step back and just see how this one pans out. But certainly at the moment it's a little bit of a near-term knife edge as to exactly whether it continues to rally once more or then just roll over and go back towards that 2320 level. So interesting times on dollar yen, and I wish you good luck in your trading, and I'll speak to you later. Thank you.